You don't want to start buying Bitcoin when it feels safe and when it's popular. That makes no sense. Why would you buy a car or house when it's more expensive? But I get it. You also don't want to start buying right before it falls 50%. You can't time the market, but one of the best ways to reduce your risk is to understand if you're entering a season of growth or a season of harvest. You want to get in during spring when everybody's planting their seeds, not in the winter when they're collecting profits. So how do you know if you're in the season of spring or winter? Let me explain. The economy moves in cycles. It heats up, it overheats, and it cools down. Bitcoin performs best when it's heating up, and it underperforms when it's overheating. Bitcoin is not a company. It doesn't have earnings, so it's driven by financial conditions. In other words, interest rates and credit. When the economy overheats, credit is restricted, interest rates go up. Bitcoin underperforms. Now, once the economy cools down enough, credit starts to expand and interest rates come down. Now, when it comes to credit, we look at the global money supply to understand if central banks are creating and printing money. And the global money supply is surging, and it leads Bitcoin between 60 and 90 days. So credit conditions are improving, Bitcoin's starting to move up, but the real acceleration comes if the Fed can cut.